Well, welcome to the next video on price and the foundation of price. And in this video, what we'll do is I'll go through a couple of my recent trades that are ongoing, so we're not cherry picking things in the past, and then future trades that I'm looking at, and how specifically price plays a foundational role in my decision process of those trades. Now, if you haven't watched the previous video where it was basically a discussion on the foundation of price and why I see that as one of the biggest mistakes most traders make in not ensuring that price is always a foundation of their decision making, you'll definitely want to check that out, because many of the topics and many of the things that we'll cover in this video will relate to that first video. So let's jump in. And the first one I want to start with is a trade that you see almost once a year or once every 2 years. And I've been waiting for this trade for at least a year and a half. And I almost missed it at the beginning of this year because I got sick at the beginning of this year. I was in the hospital, but I was able to get my orders in and actually hedge this in a couple different ways. I'm not going to get into all the ways that I did this trade, and I'm still actively in this trade. But what I'm going to share is basically how price played a pivotal role in me making a decision every step of the way, and how it's still making a pivotal role in me staying in this trade. So we're looking at WTI crude oil on the daily time frame, and we're just going to jump into this, by the way. So basically we're looking at WTI crude oil on the daily time frame, and I've been waiting for a long time for this $40 inflection point that hit all the way back in June 2017 to be tested again. I've been waiting for that for a year and a half. I don't do a lot of short in crude. I do short, but I scalp it, just given my risk profile. I go heavy long in crude oil when I see the right setup. So I'm primarily a long trader with WT crude oil, but I'm a scalper on the short side. So that's how I like to play crude oil. That's how I trade it. So when I see a long setup that gives me an opportunity, and I see my edge, and I see based on how I chart and how I do my technical analysis, when I see a setup like this, I'm pretty much just paying attention to that, just because this is a huge opportunity. You can see this here as we break this down. I'll remove these lines here from $40 all the way up to 78 roughly, or 77, let's just say. That was a 76% move over 472 days. That's a pretty strong trend in the oil market right here. And if we go back in time, just so you understand how my price thinking, and remember, this video is about price, so I'm not going to cover much other technical analysis except where it's relevant. But if we go back to price, back in, let's go back in time. So let's go here. And let's remove this because we didn't know this was happening. So on my long-term oil charts, I was looking at this, and I was saying, okay, well, the next opportunity for a good long position, the last inflection point, and for those that are in my training, you know what an inflection point is. This is a very clear inflection point compared to everything else. So this is an inflection point in the market right here. So I marked that as an inflection point. And I basically had in the back of my mind for a year and a half, if oil ever gets to $40, I'm going long and I'm going heavy, providing that the trade sets up accordingly. So as things were unfolding here, you'll notice I have my typical value channels that I have here. So my first point of action, my first very important stopping point, is actually right around $58 is where I said, okay, $58 is where I'm going to start really paying attention. So when I look at this, I really, other than short-term swings, my capital allocation for going long in WTI, I don't have to do anything. So this is why oftentimes it's important, I think, to have price at the forefront of your decision making, because there's such thing as mental energy and the energy that you spend. And if you're looking at a chart every single day and you're hemming and hawing between a decision, that's not healthy for your mental energy when you could be spending it on better trade opportunities. So for me, just to be very clear, during this whole time, my heavy long position was only $40. I made that decision. That was my line in the sand. So if it got closer and closer, it got to $40, the more I would pay attention. But every day I didn't have to look at the chart other than I would. So as we see this unfold, I would look at the chart just so I get a feel of the momentum of the market. But beyond 1 minute of looking at the chart, all I need to know is the price. All I need to know is over here, $63. Well, that's what it currently closed at. But here we see 74, 70, 71. We see it just moving here. All through this time, if I'm obviously scalping or if I'm swing trading, of course I'm watching the chart. But as far as my primary trade setup that I'm looking for, I don't have to do anything. I don't have to spend my mental energy because I'm waiting for this trade that my theory of the market, my theory of crude oil at this point in time is that at some point in time in the future, it's going to test $40, and that's the best time to buy, to go long for a longer term retrend test of a top. That was my theory. So as it continues to go, okay, that's kind of an interesting move there. You see here as it moves down. This is an interesting, I would like to say that I shorted this from the top just because my theory was that it was going to go down to $40. I just, given my risk profile and in futures and the way that the other ways that I trade oil, I'm not comfortable shorting when I do have a conviction, because this could have been a year. This could have took a year. This could have took 6 months. This could have happened in 2 months. I've learned in the oil market, I'm not the best risk management shorter. So that's why I didn't short this move all the way down. Not that I'm explaining myself. I'm just saying that that's my trade profile. So here is where it got interesting. Here is where I almost thought I might miss this trade when it went here, and when it broke the 50% mark of my value channel that I draw, which is right at $60 roughly. So right at $60, that was the other point where I was saying, okay, $60 is another inflection point in the market, which is right here. So here. So that was the only other price that I had in my mind was $60. Okay, I might miss this trade if $60 gets tested, $60 holds up, and then from $60, it does something like this. Once again, I want to reinforce the simplicity of what I'm talking about here, because I find many traders don't bring their trading down to simplicity. They might have something, if we pull up some other stuff here, they might have indicators like this, and they're looking at indicators, and they're looking at the divergence, and they're looking at other things. And oftentimes, if you just say, okay, let me not look at the indicators, let me just look at price. So I thought when this was going to come back up here and maybe go back these couple days here, I thought maybe, okay, maybe it did hit a bottom at 55, and it's not going to reach 40, and 60 is maybe where I should reframe my mind. That's what I thought. Well, because of this inflection point over here. Well, the next day, or this day here, pretty much muted that, because what's the close? The close is at 53. So at this point in time, I'm saying, okay, well, I don't need to really do anything. I'm still waiting for $40. It is within striking range, though, of a couple days of price action. So I do need to watch the charts a little bit more. So as we go through here, we see a big move down here to the 25% mark of my value channel, which is right at $50. Good whole number. It closed above $50 that day. So this is another point where I was looking and saying, at this point, I'm still committed to $40. So to me, I didn't think $50 was going to hold. I thought it was too obvious. I thought $50 was too obvious in my mind. So I wasn't concerned. And this was back in November. And typically in the oil market, I'd say in my analysis of the oil market, there is a December bounce. It doesn't always happen, but there is a December bounce. So I'm expecting a December bounce as well. So as we go into December, we see that price is starting to range here. And this is where, as the days go on, I am starting to once again say, okay, well, I'm still waiting for $40, but 50 is holding. And I know right now a lot of traders probably got trapped at $50 and probably got stopped out given the price action here, even though that this is looking very bearish to me as we look at this. So let me scroll on a little bit. And I know I'm going through this trade quick, but I just want to share all this. It's been 10 minutes in. I could have distilled this down to I'm waiting for $40. I want to just be clear. But of course what is this time that we've been waiting here? This is where being patient as a trader really pays off. This is 66 days. 66 days of me waiting for $40. But once again, what is my mental energy spent on? My mental energy is spent on one thing, $40 price. It's not spent on any divergence of indicators. It's not spent on moving averages. You don't see any moving averages on here. You don't see anything else. It's spent on price. So I'm waiting for $40. So this is where it gets a little tricky here. And right here. So this is where it gets a little tricky, is that obviously $40 is a perfect number to say, okay, that's where I'm going to buy at. My theory on going long here, and this is where I start paying attention. I actually start paying attention right here when it gets right around $45, because that's within the ATR range of actually hitting $40. So that's when I'm going to lower time frames in this trade and looking for the market to show me that $40 is going to hold. So it can dip below $40 is typically my thesis on the price action, but it has to close above that dollar figure that I'm expecting to hold. So for me, it can dip below 40, but it's got to find support and it's got to close solidly above $40. And then as I see a setup of stopping volume and other things, that's where I maybe do look at some indicators like VWAP and stuff like that. As it trades on a lower time frame, I'm looking for my entries. So at this point, I'm paying attention. This has my mental energy, because this is like I said, once in a kind of year or 2 year trade. And as we go forward here, this is where I entered right here. So I entered my first probe position right here, right around 27 December. And then as we move forward, this is my larger positions are during these 2 days here. And I'm not going to jump to the lower time frames just because it would muddy the concept of the discussion around price. But what I'm looking for is right here, $40 I'm looking to hold. If $40 breaks and it closes below $40, I'm completely out of this trade. So that was my decision. Simple decision, right on price. No other indicators, no other, that was my line in the sand. If it ever closes below $50 or $40 in a day, then I am out of this trade. So I'm in this trade now, and now I have to switch my mind. Okay. So now, and this is where traders also have challenges, because what I want to do is I still want to switch my mind, but now I want to provide my targets and my destination. Remember, I discussed that in the previous video. So what's my first destination? So my first destination in this trade is right here, based on my TA, 8% above this at $50. What I want to see happen? Real simple. I want to see $50 and I want to see it close above $50, and I don't want to ever see it close below $50 for me to stay in this trade. That's what I want to see. Otherwise, this structure and everything else here, once we get into other technical analysis, this structure is going to break down, because I think there's a lot of traders trapped in this range. So I want to see that there's still enough buyers, there's still enough upside potential in this, that $50 is going to hold. So what are my two variables on price here? My two variables on price here are, if it dips below $40 and it closes below 40, I'm out of the trade. My next upside destination target is what? It's $50. And what do I want to see? I want to see closing above $50 and not closing below $50 on any day time frame. That's what I'm looking for. So let's play this out. So good move there, right past $50, and then a pullback. This is where, see, this is where traders start to sweat. And this is why I can't stress this enough. Having a basis in price, and yes, you can look at other indicators, lower time frames and everything else, but at this point in time, what am I up? I'm up, let's say 13%, or sorry, 10%. I'm up 10%. It's a pretty good trade, pretty good swing trade, but I'm looking for a longer term. I'm looking for a retest of where I'm at ultimately on this trade, just so you know, is right here. I'm looking for a 50% move. I'm looking for just below $70 is where I think this is going to end up. That's my theory on what this recent run is going to do. So I should have probably mentioned that from the beginning, but that's where I'm looking. So I'm not looking for a retest of this top. I'm looking for a retest of the middle of this channel here. That's what I'm expecting as far as a price extension on this move. So, but at this point in time, what's unfolding here is where a lot of traders would start to freak out because they're looking at price action and they don't have the price target. So remember, my upper destination was $50, and I said if it closes below $50, I'm out of this trade. And this is a general rule of thumb in trading anyways. In most other markets besides crypto, you want to have your stop losses not at a round number, but typically in the 70s is typically where I would put my stop losses, because big institutions, hedge funds typically buy around these round numbers. They still do it. I don't know why, but typically that's where you see a lot of these price action swings. So you want to see if there's support at those round numbers. So let's play this out. So this is where this is where a lot of traders would freak out here. Right here. It closed really close to $50, but it closed above it. So my price was $50 because I want to make sure that that $50 support is going to hold up. So this day is where when it dipped below, it didn't dip below $50, but it almost got close to $50. A lot of traders would be watching their charts consistently and freaking out. I'm not, because I've already defined my destination, my upward bound, and my lower bound. So now the next days that I've rolled out here, continued. Now I'm breathing a little bit better, right? Because I'm still within an ATR of being able to break 50, but it looks like it's going to do another breakout. And it didn't quite do that. It's still ranging, but now it did. But it's still ranging. So here we go. So now once it gets past the 50% mark of this, where's my next upward price channel? You can guess it at the 50% mark. What is that at? That's right at $58, $59. So my next upward target was $58. So it's real close. My next upward destination is $58. And as we unfold this here, so again, I'm not making any decisions yet. This is a long time to be in this trade. It broke 58 here, and you'll see right now it hasn't closed below 58 since it broke 58. This is another reason why I use these value channels and stuff like that. They provide me with price targets that just seem to be accurate, especially in a market like oil. So here, let's go, and where are we at here? We're on April. I think we're going to get to modern day, or to current time. So current time. So here we are. I'm still in this trade. So let me ask you, where's my upward target? Well, you could probably guess my upward target is right here at 75%, which is $67. So that's my upward target, is $67. Now this is where I would, because it's at a inflection point right here in the market, this is where I am starting to potentially take off some risk, because I don't know the probability that it's going to break through and it's going to go to the price over extension that I expect it to. But what would I expect? What do I expect to see? Well, right now, this is where I get into, because I'm managing the trade more. The middle point of this channel is $63. And then really where I want to maybe consider taking off risk is if it closes below $61. So where I'm at in this trade, just so you know, is that if it closes solidly below $61 and price action, in addition to some lower time frame indicators, look bearish, and I don't think that this 50% value channel area is going to hold up, then I'll take off risk, and then I already have my stop loss in profit, but I would put my stop loss up a little bit more. So that's just where I'm at in this trade. What am I looking for right now? Well, here's what I'm looking for. And this is my next price target. My next price target is right here. Is right at $67. Is right in the middle of this inflection point. And then what do I want to see? I want to see a huge move through it, and then similar to what we've seen on every one of these price breaks. So see, on every one of these price breaks, we've seen this kind of channel, value channel, and then higher highs and higher lows, but then not closing below the key price. That's what I'm looking for. So it happened here. It happened here. I'm looking for the same thing right here. That's what I'm looking to unfold. But here's the important thing, and I know I've gone on for 20 minutes on this just one trade. What is guiding my decision right now? What's guiding my decision is it closed at 63. My next decision point, my downward target, is right here, $60. My upward target is $67. That's the two prices I need to have in my mind. So technically, I don't have to check this chart until the close, although given that I'm an active trader, I will be checking intraday just because it's close to my target. It's within a couple ATR moves of the target that I originally planned at the beginning of this trade. So I should have mentioned at the beginning of this video that even if you don't trade these markets, these are going to still be relevant. But hopefully it's clear in just this one example here how price played a dominant role in me making decisions. I could have gone into the minutia of the kind of lower time frames, other indicators and everything else, but I didn't have to. I can't stress this enough. Let's go to another chart. We're going to go to CNCE. This is a trade active trade that I'm in right now, but I've been talking about for the last couple days. And if we look at CNCE here, Concert Pharmaceuticals, this popped up on a scanner of mine back here. So it popped up in a scanner of mine, and then the scanner that I use for, at least this scanner for equities, is basically a pullback scanner of a break of a support. So I'm looking for a break of a support, and that break of a support, what I look for is what is the price that can't be broken for this trade to be valid. So I only have one thing in my mind, so I don't have to follow many different indicators. I don't have to look at anything else. I just have to look at basically a spreadsheet of the price and see if it's within an ATR or if that price is holding up. So for this trade, CNCE, I've been saying this, and if we actually go to my here, I've been saying if 10's protected, then my thesis holds up and I'll enter this trade, as well as how trading is around the VWAP. So on this, it's closed above 10. It's dipped below that, and I actually do have my first probe position. So I picked up a position on this below 10, something at like 965 or something like that. I don't remember exactly what it was. It might not have been exactly that. But it was in the higher nines. Mainly because I looked at the price action and I felt that it was still going to close above 10. If it didn't close above 10, I'd exit that position for either a small gain or a loss. So I'm anticipating that $10 is going to hold up here. Now I could get into all the technical analysis and everything else that I went into. The bottom line is I put a line in the sand at $10. And I'm at this point in time, this trade is only valid if CNCE holds $10. It's only valid if it holds $10. And that's really the line in the sand for CNC. Let's move to a crypto trade. So BNB BTC is something I actively trade. I think it's, if you're in the crypto market, it's something that you should be watching and trading on pullbacks. So I did add a probe position on this pullback, and you can see my value channel that I have just drawn here. What I was looking for here, if we draw a sub channel, where was my price target? My price buy target? My price buy target was 3,400 or 34,000 Satoshis. So if 34,000 Satoshis held up and it consistently closed above 35,000 Satoshis, which is the 75% mark of what would be a channel if this was actually a real channel. There's no real trading in this, but it does fit the channel model that I use for technical analysis. So my line in the sand was, my first probe position was at 3,400. And then I was going to go, as long as it continued, I was going to go heavier as long as it continued to close above 34,000 Satoshis. So, and it did. So these days here is when I added my positions. So I'm in this trade. I don't know. I'm probably up 10 to 13% probably is what that is. Let's see. From here to here. Yeah, 15% or so. Now, what's my upward target on this? Well, my first upward target, and if we do this here, once again, I'm going back to price. My first upward target aligns well with kind of this 4,000 mark, 40,000. I keep saying 4,000, 40,000 Satoshi mark. So that's the middle of this range too. So if you look at this here, this value range that's created here, the middle of this range is right at 40,000 Satoshis. So that's where, if I wanted to maximize this as a swing trade, most likely I'd be looking to take profit right around that. There might be an overextension to this next range here, which is 41,000. As far as what I'm looking for to stay in this trade, it's real simple. I want to see, my first is what happens around 40,000 Satoshis. My next is 37,000 right here is my next price level. So this 25% sub channel. And then for me to almost exit this trade and not stay in it longer term, because it's proving that it's breaking down, is if this 35,000 Satoshi level breaks and it closes below that, then there's a high probability, based on the way I trade and my technical analysis, that it's going to continue and it's going to go somewhere down here. Who knows? Now I do have I think I did let's see how right. I think I've been wrong on my analysis of BNB BTC. So this is I was looking at it back in March 6th, and my anticipation was that from that March 6th there would be a pullback. And these are based on my value channels. Let's see what actually unfolded. So it did find this value channel here as an actual support, and it's up here. So my pullback targets back in March 6th were not quite accurate. I'm always looking for pullback buys, so I'm always doing measured moves. So there's been a lot of strength in BNB BTC, and this is the other thing that is hard for traders to do. I haven't exited any of the positions really, except for one, because I can't be up 500% and not take some profit. So I've taken some profit, but it's hard when things are moving like this to kind of always be mindful of price. You can never argue with price. So while I'm looking for this is my optimum pullback dynamic value channel buys, I'm still bringing the reality of what's happening in the market back to price. So while I was completely wrong, this is the other thing. You as a trader, that's the other nice thing about price and putting it to one number, is that if you mix in too many things, like you see, I have quite a few indicators here on the chart here. If you mix in too many things, it's a lot of noise. But when you say something like, if it breaks 30,000 Satoshis, I'm wrong, and you have a if-then scenario that you get out of the trade, and basically it's a close below that, there's no discussion with yourself. There's no arguing. It's really easy. The other thing that's important is that it's easy to self-correct yourself. What I mean by that is oftentimes, and I went through this as a trader, I would enter trades and I would have no idea why I entered trades. Some of them were successful, some of them weren't. I would sometimes just have no idea what scanner I was using or what indicator or anything else. And it was hard for me to self-adjust and only focus on the trades that I should be doing. And getting to price and making sure that that's a foundation ensures that you have the basis of what underlines all markets and all your trades as a decision point. So oftentimes it's getting down to a simplistic view of your decision making and saying that, look, if this price breaks, my thesis and my theory of what I've done technical analysis on this instrument broke down, and I'm wrong, and I should not spend any capital or mental energy on this trade anymore, and maybe then do some more technical analysis and look for the actual setup that makes sense. And that's what I did here. So here, my technical analysis was wrong. I have no problem being wrong. I'm wrong. I'm probably wrong half the time throughout the day. I'm wrong quite a bit. I don't even count how much times I'm wrong. This is a hard thing for traders, because it's oftentimes wrong means that you're losing capital. But I have no problem even putting myself out there and being wrong, because it's part of trading. You have to realize that you're probably going to be wrong half the time, if not more, on a lot of your ideas. The key is, can you properly risk manage yourself to grow your equity? And one of the ways to do that is always focus on price. So when I was wrong here, did I stop buying BNB? No. What did I look for? Well, I looked for my typical setup on BNB, which is my typical setup on BNB. And what I look for an entry is, and it's still price focused, but it's, okay, where is the potential pullback? And let's look what this pullback was. This was a 24% pullback, 23% pullback. So that's good. 20% is a good mark pullback. So will it have a 23%? Will it have a 20% pullback? Will it find support? And then I look for a 3-bar support. What I mean by that is, if we look at this here, I look for 5 continuous down bars, and I count this as a down bar. So this here is a down bar. I count this whole move as at least 5 continuous down bars. And if we go to a different candlestick pattern, you'll see these are 5 continuous down days. So 5 continuous down days. I look for that. That pattern is what I look for. And then once there's 5 continuous down days, I look for a 3-bar setup in order to go long and support. And what do we see here? Well, at the end of this 5, 1, 2, 3, 4, 5, there's 6 and 7. So this is not a support. This is not a support. And then 1, 2, 3, 3-bar support. The price is holding. So the low price is holding here. Although it's not quite, this is a little early in the trade. Once again, what was the price we were talking about? 34,000. So it crossed 34,000 this day. That would be a target entry to go long. So that's my overall trade setup. It's still based on price though, because I'm looking at in relation to the measured move pullback and my 5-bar theory. I look for a 5-bar pullback that matches a measured move. And then I look for a 3-bar setup. That's kind of the way I've been trading a lot of BNB. It tends to follow that pattern. So, but it's still focused on price, because that all that is moot if 34,000 did not hold. If 34,000 wasn't broke, that's 35,000, but it's 34,000, I think, or 35,000 didn't break and didn't hold, didn't stay and close above, all of it's moot. It's all a moot point. So I mentioned that just because that's, if you're looking at like the full, of course, it's deeper than just price when you're doing technical analysis, because you're looking for clues that the market is leaving, that price is going to hold for you to get optimum entry, for you to maximize your trade, for you to protect your risk. But at the end of the day, what undergirds and what's the foundation of my decision making is price. Let's go to another one that's interesting in play right now, which is EOS. So EOS, what do we have here? I did actually a analysis here. Let's see what I did. EOS, I said go long, 200 EMA. Let's see what unfolded here. Still in this range, and it's still not invalid yet. Now, I did recently put out on Discord, if you're in the Discord group, that the opportunity on this, to me, is if 10,000 Satoshis holds. So here, which is down 4%, if 10,000 Satoshi holds, good round number, and if we look at this actual range here, let's do a value channel. We'll just go from the highs and the lows. That aligns, that 10,000 range aligns very well with the 50% mark of the recent pivot low and the recent pivot high. And it's very clear that it's hit a value range here. So what am I watching for to stay in EOS? Because I'm in a position and maybe add to EOS. I'd like to see a 10,000 hold. It's the only decision point I have to make at this point in time. It can break. It can break like it has here. But I want to see it close like it has here. In these ranges here. It's got to close above 10,000 for the bullish scenario to still be playing out. Now we're on a weekend that I'm recording this. I'm recording this on a Sunday, so some days Sunday volume and everything else can be off. Sometimes it can be good, but we'll see. Now I'm kind of hindering a lot of my technical analysis here because I don't have like the weekly open and some stuff like that actually help. But at the bottom line, what am I really deciding my decision on at this point in time? On 10,000 Satoshis. I shared that on Discord. I'd share that in my group. It's the opportunity to buy the pullback. Where will I be looking for entries? 10,000. And then if 10,000 breaks and it closed below that, then to me, it's not worth the risk. There's a higher likelihood that the downside's going to continue down to who knows. That's the way I see it. Now you will see some support once these areas are broke here. So another way to look at it is, let's say you don't want to be as aggressive as 10,000. What's your next price target? Well, your next price target could be this pivot low. If you're going to use this pivot low, if you wanted to be a little bit more, you could use the closes here. And you could say 8,700 Satoshis. And then anything below that, you'd want to put a price target on as far as your pivot low. Because typically in crypto, when a support like this is broken, you will see at least a reaction. And you'd like to see a reaction, then an upward price target to be held. So let's say that does unfold. Let's say that unfolds. 10,000 is broke out of the position. What do I look for next? Look for maybe here. And this is just simple analysis. So let's say we say 85. We're looking for then 8,500 Satoshis to hold. So it can go below that. But then for us to have a continue upside long position in EOS BTC, we want to see 8,500 hold, close above, and then of course we'd be redrawing our value channel and everything else. But that would be another price target that we would be looking for. The important thing here is you're not doing anything between all this stuff here. Like if it just kind of goes down here, and your analysis is that 8,500 is my price target, you're not doing anything. You don't have to spend mental energy on it. And you can even put an alert so that you don't even have to look at the chart. You get an alert when something happens within that range. So I know I'm going back to simplistics of price, and I know most people probably get this. The reason why I think this is important to discuss now is because I see a lot of confusion around different technical analysis, different indicators, and everything else that's clouding what really helps you focus your mental energy. So right now my mental energy is on two things. 10,000. It's on 10,000. It's not on anything else. It's on 10,000. That's the only thing I'm waiting for EOS. It looks like it might go down there, but we don't know. I mean, it looks bearish to me. So right now there's bearish sign. Something could change, but right now there's no catalyst. It looks like it's going to change. But right now, 10,000 is my line in the sand price number that I'm looking at. I don't have to pay attention to anything else. So then I can go on to something else. So I think at this point in time in the video, what I'll do is I'll look at what we've covered so far. We've covered just a couple trades, and I know I covered only a few of the topics from the price discussion from the first video. So the next videos that I'll do is I'll just focus on one core concept and then use examples from that. The first trade that I did here on WTI, I went on longer than I anticipated, but it's actually one of the best case studies on using price in my recent trading that was the foundation of my decision making, because it was very clear. It was almost a kind of a perfect example of using price in a trade and making sure that price was the foundation of my decision making. And what I would suggest from your perspective is that look at your own trades and look at your own decision making and see where the price discussion is at and where your price decision line in the sand is. And actually look at some of your recent trades and see whether or not if you would have been more mindful of price. If you're not, maybe you are, but if you would have been more mindful of price, and if that more mindfulness and bringing, it's kind of like a calming back to price. If you would have brought your thinking back to just one static number of price, if that would have helped you trade better and helped you be a better trader, less emotions, make better decisions. My gut feeling is that most people, if that's not the foundation of their trading decisions, that when you bring it to price, it calms your trading decisions down a lot. It erases a lot of the noises. And then you can then add layers on top of that. And that's what we'll cover on the following videos is layers. We'll talk about moving averages. We'll talk about some indicators. We'll talk about divergence. We'll talk about things like that. But undergirding all that is price. So that's really the key. So if you haven't subscribed yet, definitely subscribe. You'll see a link to the Discord group down below. I do have training if you're looking for training. And I just opened up one-on-one coaching. It's something that I've been thinking about for a while. So I think I only have one more spot left for that. But one-on-one coaching, it's pretty intensive. My one-on-one coaching is a little bit different than others that I've seen out there. My expectation is pretty high as far as the people that will be accepted on that, as far as what I'm expecting on a daily basis and really growth. I'm expecting substantial growth in trading, and it's a daily diary requirement and just a lot of other things that I think will help any trader. Well, you should be doing anyways, but if you're in one-on-one coaching with me, it's an absolute must. So that's all. I look forward to seeing you in the next video.